In this training, we're going to talk about the 4 alternatives a business owner has for capital to grow their business or get through a tight pinch, and why DAC is the best source 80% of the time. So here's an example. You got a restaurant owner who wants to add a patio. They say the average restaurant seat generates about $20,000 in revenue per year. So the more seats you have, the more revenue you're going to do. So this restaurant wants to add a patio. They're going to need $100,000. Well, maybe they are in a tight pinch and they need $100,000. Maybe they want to buy another location. It doesn't matter the use of funds. But let's say they need that $100,000. What are their 4 choices? And the third alternative is the big bank. Well, the big banks are great for some people. First of all, you have to have great credit. And if you have great credit and you want a big loan, they're really good. But it's usually, $5,000, $10,000, $25,000. And if you're a business, you're not going to get a credit card unless you've been in business several years, right? Again, you generally have to have a 700 credit score or higher, which rules out over 80% of the business owners out there. And also you have to be in business for at least 1 or 2 years, and you have to be doing a lot of revenue. So that rules out, again, 80% of the businesses. Now, there's 2 things about a big bank loan. Number one, they want it to be at least $500,000 or more before they want to get into looking at it. And also they want collateral. So you have to put up your building there, as you see, either your house or your building or your property. If you're borrowing $400,000, $500,000, you need to have $400,000 or $500,000 in equity available to pledge for your loan in case you don't pay it back. Again, they don't want to touch a loan under $500,000. Again, only about 20% of the business owners out there can utilize these. They can't get a big business loan, and they don't have equity in their home, and they don't have good enough credit to qualify, which now we're down to 80% of the businesses in America can't qualify for what you're looking at right there. 80% cannot qualify. So where do they go? Well, that's where we come in, alternative business capital providers. Alternative capital providers are easy for businesses to get approved. They look at your cash flow more than your credit scores.